Hey guys, so I got a topic today that I think would be helpful for a lot of you, and this is not just for the investors, but pretty much anybody that's looking to sell a home. So as you know, we sell multiple houses every month, and we've got a lot of experience selling houses, and we've seen a lot of different things, through the last few years doing that. And we've learned a lot of lessons. We've done some things right, some things not, but I wanted to give you guys some tips on when you're selling a house, what are the things that you should be thinking about, and a few tips and tricks here. So the first one that I got is, before you even list a property, whether it's your own house or it's a flip, you should do a final walkthrough, and you really need to put on I call them your buyer glasses. So I'm a real estate investor, and I tend to think of things in terms of value and money and things like that. Sometimes I kind of forget, well, if I was a person wanting to live in this home long term and buy it for myself, what are the things that are important to me? So, for example, some people have certain colors that they like, and it's really not about what you like, it's about what the customer likes. So, like for example, with paint colors, you want to be kind of neutral, and you don't want any really bold colors, because you might appeal to the 1 to the 5% of buyers, but you want to be appealing to the masses. So you really need to have your buyers wants in mind when you're designing a rehab and things like that. This goes more for the purchase side, but you also want to think about what other things might affect affect the buyer's decision to buy this property. So it might be schools if there's families is very, very important. And one very brutal, tough lesson that we've learned recently is proximity to highways and freeways. So we have a higher end flip that we've been trying to sell here for a few months, and it backs up onto 435, which is a major highway here. And there's pretty significant highway noise when you're outside of that house, and we've really had a tough time selling it because of that. And part of that is due to the price range that the house is in. So if you're in the buyers buying $100,000 to $200,000 house, totally different type of buyer mindset than somebody that's buying a $400,000 plus house. So all things you need to be thinking about. Second one is your agent. If you yourself are not very experienced, you definitely need to have a very strong agent. So I would say, do your research on that agent, make sure that they have lots of experience and they know the area and market very well. So we're very lucky. We have, I'll give her a little shout out. So our agent is Brannigan Barnett with Keller Williams, and she does an awesome job for us. Knows the market very well, and really has a very good understanding of what stuff's going to be able to sell for. Next one here is list price is absolutely critical, and there's kind of a science that goes into this. So if you list a property too low, obviously you're leaving money on the table, which you don't want to do that. If you're listing it too high, then the problem is you kind of lose momentum, and that is also a lesson that we've learned the hard way several times. So you want to be listed, if your house, and it really depends on the house too. So if your house is a very desirable house, you rehabbed it, it's very nice and good shape, and there's a high demand for that type of property, then you can afford to be a little bit more aggressive on your sales price, but not too aggressive. And you want to be listed so that you're going to get multiple showings and multiple offers. And really that first week of a property being listed is kind of critical, first couple weeks. So if you're too aggressive, what can happen is people won't look at the listing. You'll be priced too high, you don't have people looking at it, and you'll kind of lose interest. And then whenever the house sits on the market too long, I don't really understand the psychology of this, but basically with buyers, if the house sits on the market too long, they tend to think that there's something wrong with it, or that there's a reason that it's still listed, and the perceived value of that property just automatically goes down. And that's when you start getting lowball offers and you get really frustrated. Been there. And obviously being too low, that's not good either. So the next part is, once you actually do agree on a list price and you list the property, so then you'll start getting feedback. So definitely pay attention to that feedback if there's any items that need to be addressed, if you can address it. So for example, somebody says needs another bedroom, well, you're probably not going to address that. But if somebody says, I don't know, appliances, needs new appliances, or something easy that you could actually go and fix, you might want to think about, doing that. Or if you need to add any agent notes, we've had notes sometimes where seller will agree to do X with a suitable offer or something like that. So those are all little tools that you can use. So then once you start due, you do get actual offers on the property or multiple offers. That's when you kind of start the analyzing and the negotiating process. And there's a few things that you need to consider with those offers. So price is not necessarily the most important thing. So you need to look at the strength of the offer, what kind of financing they're using. So, obviously an FHA or a VA loan is less favorable than somebody that's paying all cash. If it's all cash, it's probably going to close. When you're using financing, there's all sorts of contingencies, so financing contingencies, etc. And then when you're doing FHA or VA, they have special requirements that their property has to meet for the financing. So we've had times where, FHA inspections go through the property and there's stupid little things, a list a mile long of stupid little things that they need to have fixed that just causes more pain for you. So, and then the other thing is closing costs. So, a lot of times buyers are going to ask you to pay some portion of their closing costs. So all of that needs to be factored into, in the offer and when you're analyzing the different offers that you get. And once you do start the negotiating process, I always try to put myself into the mind of the person that's buying the house. So you really need to understand what's important for them. So, for example, if it is an FHA buyer and they're asking you to pay closing costs, what do you think is sensitive to them? It's probably money out of pocket. So I'm guessing that if they're FHA, they're asking me to pay all their closing costs. They probably don't have a whole lot of money in the bank to buy this property. So they probably want to minimize their out-of-pocket expenses. So if the price is $200,000 and they're asking for $5,000 in closing, and I want to net $105,000 out of it, I'm not going to ask them to get rid of the closing costs. I'm just going to ask them to increase their price by $5,000 because, that makes a very small difference on the monthly payment, but, it's a $5,000 difference out of their pocket. On the other side, if it's a conventional loan and they're putting down 20% on the house or 30% on the house, then cash out of pocket is probably not as important to them. So all things that you need to be considering. So once you get through that and you do accept an offer, that is really just step one. So a lot of people, assume offer accepted, that means that the house is as good as sold, and that is definitely not the case. That is just step one in a long process of things that have to happen to actually sell your house. So the first thing that's going to happen after an offer gets accepted is they're going to order inspections. So usually it depends on the bank and the inspector and things like that, but usually within 5 to 10 days of you going under contract, they're going to have an inspector over. They're going to do a full walkthrough. They're going to get in every nook and cranny of that house and inspect, every system, plumbing, heating, electrical, roof, everything they're going to look at. And then you got the buyer resolution items. So that person will, after getting that report will make recommendations on things that have to be fixed. The buyers will sit down with their agent and they'll go through the list and say, these are all the things that are important to me, and they will ask you to make those repairs. And it can be everything from, little things like touch up this paint to put a new roof on the house. And those are all things that, you got to work through and figure out which ones you can, which ones you're going to agree to, which ones you're not going to agree to, what's feasible, what's not. And you'll find that some buyers are very reasonable. They don't ask for a whole lot. Other buyers are absolutely crazy and they'll write you a list of 3 pages worth of stuff that they want you to fix, and you've got to work your way through that and negotiate it. One more reason for listing the property at the right price is if you have multiple offers on the property and a backup offer. So I would always recommend, show for backups, get a backup offer on that property. And the thing you have to think about during the negotiating process is leverage. So if you have one offer on the property and it's been sitting on the market for a month and a half, you don't have a whole lot of leverage. If you have 3 backup offers, you have a lot of leverage. So the chances are that they understand that they can't ask for a whole lot during that buyer resolution period, because if you don't like what they're asking for, all you do is cancel the contract and go to the next guy. So definitely all things that you need to be thinking about during this entire negotiating process. And then last thing I want to talk about is, what are some of the things that can happen? So the financing can fall through. Our realtor does a very good job she really does her due diligence on the financing. So before we accept an offer, she will actually call the lender, so the buyer's lender, and she'll try to understand, have they made it through underwriting? Have they looked at their credit? So one thing that's really frustrating as a seller is, buyers can get approval letters like very easily. Banks hand them out like nothing. They really don't mean a whole lot. So just because a buyer is pre-approved does not necessarily mean that they will make it through underwriting and actually qualify for the financing that they need to buy your property. So we try to do a little bit of extra due diligence on the financing situation, and we might even take a lower price from a different buyer if their lending seems stronger. So the other things that can happen is you might not be able to come to an agreement on the inspections. So they might ask for a ridiculous long list of things and you don't want to do all that and you fall out of contract. There might be something that scares the buyer away. So, buyers are especially first-time home buyers, which the type of houses that we're selling is a lot of first-time home buyers. There's like 3 things that really scare away buyers. So foundation issues, mold, and I guess roof issues would probably be the other ones. So, if they see, there's a crack in the basement and there's some water coming in, that might just scare them away and they don't want to buy the house anymore. So there's things that can happen there. And a lot of times it's just fear because they don't understand it. So foundation issues don't scare me because, it's just a dollar sign. Anything that is broken can be fixed. It's just a matter of knowing how to fix it and assigning the right cost to it. But unfortunately, buyers don't think that way. So you really have to kind of control the psychology and things there. Another thing is, so if the house sits too long a house can sit for a long time on the market. The house sits for a long time, that's like automatic sign for people to start lowballing you, which I talked about before. And when a house does go back on the market, so something else to consider as a risk, if a house goes back on the market, that's also kind of an automatic seller or buyer psychology thing of start lowballing me. So there definitely is a lot of risk and things that you need to consider before going under contract on a house, because if that does fall through for some reason, you can basically, I would say it probably is equivalent to a $5,000 to $10,000 price reduction, because that's just what's going to happen. That's not always the case, but generally, if a house does go back on the market, even if it says no fault of seller, a lot of times people just have the perceived value of the property goes down. So that's really all I had. Thought this would be useful. So it's definitely a process that we go through multiple times per month, and I kind of take it for granted, all the steps and the things that we've learned, but there definitely is a lot to the actual selling process. And this applies just as much to the person selling their primary residence as it does to investors. So I thought it would be a good topic to do a video on. That's it. Thanks.